Today we are covering loan brokerage and MLO concepts for the California real estate exam. This is a critical area because licensees often touch mortgage activities and the rules are strict. A real estate broker in California can act as a mortgage loan broker, arranging loans for borrowers and being compensated for it. However, if these loans are for residential properties of 1 to 4 units, the broker and any of their salespersons involved must have a mortgage loan originator or MLO endorsement on their DRE license. This is obtained through the nationwide multi-state licensing system known as NMLS and requires additional education and passing a test. The exam will test your understanding of when this endorsement is required. For instance, a question might describe a broker arranging a loan on a commercial building. In that case, an MLO endorsement is not needed, but if the property is a duplex where the owner will live, the endorsement is mandatory. A cornerstone of loan brokerage is the Mortgage Loan Disclosure Statement, or MLDS. This document must be given to the borrower within 3 business days of receiving their completed loan application. The exam loves to test the details of this form. It outlines all the estimated costs, the broker's commission, and loan terms. Be aware of trick questions where the MLDS is provided at closing. That is too late. Article 7 of the Real Estate Law imposes specific limits on commissions and costs for smaller loans. First trust deeds under $30,000 and junior trust deeds under $20,000. For example, on a first trust deed of $25,000 with a term of 3 years or more, the maximum commission is 10%. For costs like appraisals and credit reports on these smaller loans, the maximum charge is 5% of the loan amount or $390, whichever is greater, but it cannot exceed actual costs and is capped at $700. Now let's talk about a major exam trap, usury. California's Constitution generally caps interest rates at 10% for most loans. However, there's a massive exception. Loans made or arranged by a licensed real estate broker and secured by real property are exempt from this usury law. An exam question might present a scenario where a broker arranges a private money loan with a 15% interest rate. Many test takers will incorrectly flag this as usury, but because a broker arranged it, it is perfectly legal. Brokers also get involved in trust deed investments, where they connect private investors with borrowers. When doing this, the broker has a fiduciary duty to the investor. This includes disclosing all material facts about the loan and the borrower's creditworthiness. If a broker pools funds from multiple investors to fund one loan, it's called a fractionalized trust deed, which is regulated as a security. Finally, remember this phrase to keep the usury rule straight. If a broker arranges the loan, usury rules are thrown away. This shortcut helps you remember the critical exemption that frequently appears on the exam. Don't fall for the trap of applying the 10% limit when a real estate broker is involved in arranging the loan. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.